What is going on, everyone? Welcome back to the channel. I am your host, and today is April 5th, 2026. The market is moving in a big way today, and we have got 5 stocks that absolutely demand your attention right now. We are talking a major Tesla sell-off, a stunning Intel surge, AMD flexing its technical strength, Lucid Group holding key support, and Netflix quietly building a very powerful base. I have broken each one down with full technicals, price targets, and my analyst rating. Let us get straight into it, starting with the biggest mover of the day, Tesla. Alright, let us start with Tesla, and folks, this one is not pretty today. Tesla is down 5.42%, sitting at $360.59, on volume of over 83 million shares. That is well above the average daily volume of about 69.5 million, giving us a volume ratio of 1.2, meaning this sell-off has real institutional participation behind it. This is not just retail panic. This is funds reducing exposure. Now let us look at the technical picture, because the chart is telling a very clear story right now. Tesla is trading below both its 20-day simple moving average of 383.86 and its 50-day SMA of 403.48. That is a bearish stack. The one silver lining? Price is sitting right on the 200-day moving average at 360.59, almost to the penny. That is a critical inflection point, and the bulls absolutely must defend it here. The RSI is at 38.6. That is approaching oversold territory. The threshold is typically 30, so we are getting close to a potential bounce zone, but we are not there yet. There is still room to fall before we reach a technical washout. Looking at the 52-week range, Tesla hit a high of 498.83 and a low of 214.25. The 6-month low is 355.28, meaning today's price is dangerously close to breaking that recent floor. A daily close below 355 would be a significant bearish signal. The P/E ratio of 333.88 is extraordinarily elevated. Tesla needs flawless execution and massive growth to justify that valuation, and any weakness in delivery numbers or margin compression will continue to pressure this stock. Support sits at $355. Resistance is up at $384, which lines up with that 20-day SMA. My 3-month price target is $340, and my rating on Tesla right now is sell. The trend is down, volume confirms distribution, and the valuation leaves little room for error. Next up is Intel, and what a dramatic reversal story this has been. Intel is up 4.89% today, trading at $50.38, on massive volume of 117 million shares against an average of about 99 million. That volume ratio of 1.18 tells you big money is flowing into this name today, and with good reason. Let us look at the technicals. Intel is trading above both its 20-day SMA of 45.29 and its 50-day SMA of 46.16. That is a bullish configuration. Price is also sitting right at the 200-day SMA of $50.38, which is a major long-term pivot level. Breaking and holding above the 200-day would be a very powerful signal for longer-term investors. The RSI is at 59.4, that is in healthy bullish territory. Not overbought yet, plenty of room to run before we hit the 70 level where momentum traders start taking profits. Now, the fundamental picture on Intel is complex. The P/E ratio shows as 0, which typically indicates the company is not currently generating net earnings on a trailing basis. Intel has been in a deep restructuring cycle, investing heavily in domestic chip manufacturing under government-supported programs. The thesis here is not about today's earnings, it is about the next 2 to 3 years as those fabs come online. Looking at the 52-week range, Intel went from a jaw-dropping low of 1767 all the way up to 5460. We are now at 5038, which means the stock has more than doubled from its lows. That is a remarkable recovery. 6-month low is 33.62, so even from there it is up nearly 50%. Support is at $46, which aligns with that 50-day SMA. Resistance is at the 52-week high of $54.60. My 3-month price target is $54, and my rating is buy. Momentum is strong, volume confirms accumulation, and the technical breakout above both short-term moving averages is constructive. Number 3 is Advanced Micro Devices, and AMD is quietly putting together one of the most technically sound setups in the semiconductor space right now. The stock is up 3.47% today at $217.50, on volume of 38.4 million shares, essentially right in line with its average. Volume ratio of 1.0.
This is orderly, controlled buying. No panic, no frenzy. Just steady accumulation. The technical setup is strong. AMD is trading above its 20-day SMA of 200-273 and its 50-day SMA of 211.64. Similar to Intel, AMD is also sitting right at its 200-day SMA of 217.50. This is a key test. If AMD can break decisively above the 200-day and hold it, that opens the door to a much larger move toward prior highs. The RSI at 64.9 is approaching overbought territory but is not there yet. It signals strong momentum without being stretched to the point of immediate reversal risk. From a fundamental standpoint, AMD trades at a PE of 83.33, expensive by most traditional measures, but not unreasonable for a high-growth semiconductor company competing directly with NVIDIA in the AI chip space. AMD's MI300X and next-generation GPU roadmap remain compelling catalysts, and if the company can capture even a modest share of the AI training and inference market, the earnings upside could be substantial. The 52-week range goes from a low of 76.48 to a high of 267.08. The 6-month high is 264.33, so there is meaningful upside from here if the market cooperates. Support is at 202, aligning with the 20-day SMA. Resistance is at 264, the 6-month high. My 3-month price target is $248. Rating is buy with high confidence. The technical setup is clean, the AI tailwind is real, and volume behavior is constructive. Now we move to the speculative portion of today's lineup. Lucid Group, ticker LCID. The stock is up 4.18% today at $9.96, but here is the catch: volume is only 4 million shares versus an average of 5 million. Volume ratio of 0.8. That means today's move is happening on below average volume, which is a yellow flag. We want to see conviction behind a move like this, and right now we do not have it. From a technical standpoint, LCID is trading just below its 20-day SMA of 10.01 and below its 50-day SMA of 10.22. The 200-day SMA also sits at 9.96, which is essentially where price is right now. So LCID is at the crossroads of all three major moving averages, which makes this a very indecisive chart. The RSI at 50.7 confirms that neutrality, it is right in the middle. No strong trend in either direction. The fundamental picture on Lucid is challenging. No positive PE ratio, meaning the company is burning cash. The market cap is about $3.26 billion, which is tiny compared to where this stock once traded. The 52-week high is 33.70 and the current price is 9.96, a devastating decline of over 70% from the peak. The 6-month high was 24.77, so even from 6 months ago, the stock is down more than 60%. Lucid does have backing from the Saudi Arabian Sovereign Wealth Fund, which provides a degree of financial cushion. But production volumes remain very small, competition from Tesla, Rivian, and legacy automakers is fierce, and the path to profitability is long. This is a high-risk, speculative position. Support is at 9.15, which is the 6-month low. Resistance is at 10.22. My 3-month target is 10.50, and my rating is hold. Not a conviction buy, not a conviction sell, watch and wait for a directional break with volume. Last but absolutely not least, let us talk about Netflix. Netflix is up 3.25% today at $98.66, on volume of 37 million shares versus an average of about 39.7 million. Volume ratio of 0.93, slightly below average, but the quality of the technical setup here more than makes up for it. Here is why I love this chart. Netflix is trading above both its 20-day SMA of 94.66 and its 50-day SMA of 88.17. That is a bullish moving average stack. And just like AMD and Intel, Netflix is also testing its 200-day SMA right at 98.66. This is the third time today we have seen a stock at a 200-day inflection point, and for Netflix, the momentum suggests it wants to break higher. The RSI at 59.2 is nearly identical to Intel, strong bullish momentum, not yet overbought. There is room to run towards 65 or even 70 on the RSI before any meaningful technical resistance kicks in. Fundamentally, Netflix is the most attractively valued stock on today's list by far. A PE of 39 for a company growing revenue, expanding internationally, dominating streaming, and adding advertising revenue streams is genuinely reasonable. The market cap of $418 billion reflects Netflix's status as a global media powerhouse.
The 52-week range goes from a low of 75.01 to a high of 134.12. The 6-month high was 124.14, so there is meaningful upside to prior highs from current levels. Support is at $88, aligning with the 50-day SMA.
Resistance is at the 6-month high of 124.
My 3-month price target is $115, and my rating is buy with high confidence. Netflix is the highest quality name on today's list, combining technical strength, fundamental value, and strong earnings momentum.
Alright everyone, that is a wrap on today's top 5 stocks for April 5, 2026.
Quick summary: Tesla is a sell as it tests critical 200-day support on heavy volume. Intel and AMD are both buys as they build momentum above their short-term moving averages. Lucid is a hold, wait for volume confirmation before committing. And Netflix is our highest conviction buy of the day with a clean technical setup and solid fundamentals. If you found this analysis valuable, please smash that like button, it genuinely helps the channel grow. Hit subscribe and ring that bell so you get notified every single day when we drop our market analysis. Drop your questions or your own stock picks in the comments below, I read every single one.
See you tomorrow.